In this video, we will analyze the process of buying your first property. Essentially, it is what and how to buy a property. In case you are not paying in cash, meaning that the property will not be paid in full with your savings. It is important to consider the following steps before start looking for properties. First, entrepreneurs and investors need to check their credit score. The minimum credit score, in 2023, for a conventional mortgage is 620. Ideally, it is recommended to reach a 740 score to get a better deal for the mortgage, including interest rate and terms of the loan. If you struggle to build your credit, monitoring the credit score constantly within Credit Karma or Credit Sesame are recommended. Also, paying and complying with financial responsibilities on time will increase the credit score. Another consideration for entrepreneurs and investors, before looking for properties, is to talk with a lender, a bank or any other financial entity. They will perform the financial analysis to verify if you qualify for a mortgage and define the specific loan amount. Normally, the lenders will request tax returns, proof of employment, proof of income, bank statements, liabilities, and assets. They will also look for the details of your credit score. Because timing is a critical consideration while looking for properties, it is crucial to have all this paperwork previously ready. Once the entrepreneur or investor qualifies for a loan and is aware of the amount, it is time to start looking for properties. A licensed real estate broker is recommended to help you with the process. Define the type of real estate property that you are interested within the budget or credit. Residential, commercial, or any other type seen in previous videos. The initial research can be done using apps such as Realtor, Zillow, etc. There are many apps that can help with the research. It is essential to consider that a lender will not provide the property's full value for the investor. Hence, saving between 15% or 20% of the value is required as an initial payment for a desired property. This is called down payment. It is the difference between the full price of a property and the authorized mortgage. It is the remaining amount that an individual needs to pay in addition to the mortgage. During the property research, analyzing as many as possible is recommended. Compare prices, square footage, amenities, property condition, areas, location, and surroundings. Retrieve as much information as you can from the real estate broker and the databases to strengthen decision-making. Verify if new developments are created. The property might decrease its value if there are buildings or very busy, noisy, insecured areas. Remember, while selecting a property to invest in, the higher the price, the higher the risk, and it is more difficult to sell it. In contrast, low-end properties might carry additional issues that need to be analyzed and considered by the investor. When specific properties are selected, it is crucial to perform a financial analysis. Essentially, a pro forma income statement can be made, as seen in previous videos. First, analyze the cash flows of the property. So, let us research about the revenues, in this case, the rent. An ideal amount would be around 1% of the total value of the property. You can retrieve information from Craigslist, Trulia, or Rent-In. Then, look for the associated operational costs such as property management, maintenance, utilities, property taxes, monthly mortgage, down payment, and interest rate. The addition of all these costs represents the total operating expense. The difference between the rents and the total operating expense is the operating income, essentially the property's cash flows. Let us see this framework applied. Assume that the cost of a desired property is $300,000. A typical down payment of 20%. Meaning that we have to pay in advance from our savings $60,000. And the loan from the financial entity will be $240,000. Today, 2023, the average interest rate is around 6.75%. The loan term of 30 years, and we suggest requesting a fixed interest rate. This image from mortgagecalculator.org summarizes the loan structure. Hence, the monthly mortgage, according to this data, would be $1,556. The first year, will get us a equity, from the principal, the amount of $2,557. With this information we can construct our projection. $300,000 as the property value. The monthly operating expenses include $1,556 of monthly mortgage. In Texas, the property tax is high, between 1.6 and 2.2% yearly of the property value. We will assume a 2% of property tax, which monthly represents around $500. If you are not going to manage your property, you need to consider 8% of property management. However, you can manage your own properties saving this amount. $250 of insurance that depends on the amount needed to rebuild the property, normally around 1%. Another $100 for maintenance. However, if you buy a new property, this expense should not be considered. And let us assume another $100 from other expenses that might be such as HOA, or homeowners association. You can also consider vacancy, gardener, or even a pool expense. Sometimes the landlord has to pay utilities like water, so it might be considered depending on the case. When adding all these expenses, we will have a monthly total of operating expenses of $2,746. Meaning that to break even, you will have to rent this property for at least $2,800. Assuming a monthly rent of $3,200, subtract the rents from the total operating expenses, results in the operating income, which essentially is the cash flow of the property. It is important to consider that this difference of $454 is on a $60,000 down payment investment, representing the cash return. In summary, $454 times 12 months equals $5,448 a year. Because the loan is paid monthly in the form of principal, from the previous amortization table, the first year we get $2,557 as equity. So, $5,448 plus $2,557 is our return on investment of $8,005. Approximately 13% return on $60,000 down payment. It is not recommended to buy a property that is not generating cash flow. At least, break even. As shown in previous videos, always do your numbers before making an offer and rely on a licensed real estate broker. Ask for recommendations from professional and reliable real estate agents. Because the negotiation process is critical to saving you time and money. Be careful while selecting a property, especially old properties. Hidden costs might arise. Hence, try to perform an initial analysis of the property's condition, to detect possible issues and start the bidding process. This initial walkthrough is made after the buyer is pre-approved for a mortgage. It is an opportunity to feel the property and detect possible renovations. If several areas are to be updated, the price may be lowered during the negotiation process. In summary, consider for the property offer and negotiation process your financial analysis, previous revisions of the house condition, forces of supply and demand in place, and as much data you can collect on the property. If the seller accepts the offering, request a detailed home inspection to evaluate a home's structural and mechanical condition. A review of the roof, plumbing, ceiling, electrical, and if the property had pest control is crucial. Because these elements might create issues and higher costs for the property in the future. Remember that, as a buyer, you can always back up from a deal. It is not the same case for a seller. So, be careful when selling a property and signing a sales contract. Analyze the escrow process, in which a neutral third party, a notary, will collect the funds and documents for the closing process of the property. Will collect the earnest money check, loan documents, and prepare the deed. This third party will provide a draft of all the detailed costs, including escrow, closing costs, miscellaneous. The closing costs usually are between 2 to 6% of the whole operation price. Remember that the escrow will also include a cost of 5 to 8% of the property's total price, of the real estate agent commission. As soon as the closing is fulfilled, start doing the renovations of the property and hire a professional to create engaging pictures. In this way, the property can be rented as soon as possible and avoid losing money. Be also aware that if there is an old kitchen, bathrooms, walls, and floors will need to be updated. However, those are easy and normally not expensive to upgrade. This investment is worth because allows increasing the monthly rent. As a result, find reliable contractors in the area to help with the general maintenance and upgrades of the property. It is worth considering that any contractor's estimate might end up costing an additional 15 to 20%. And the time frame to finish will also be more. Unfortunately, this is normal to happen in the construction industry. Hence, try to create contracts, especially for bigger upgrades to the property, in case the bid increases substantially or the time frame goes extremely delayed. When doing renovations and upgrades, it is suggested to do them simple, functional, and practical. Do not waste additional resources on fancy materials. Laminate floors or tile, avoid carpets, and have functional appliances. Keep it simple, easy to fix and easy to be replaced. To rent a property, it is recommended to use Craigslist, Apartments.com, Zillow, Trulia, Redfin, and an agent will rent it on MLS. If an agent rents the property, they will normally charge the first monthly rent as a fee. A detailed process to select your new tenant is essential, including a background and credit score check to guarantee that the monthly payments will be made on time. Finally, the process of property management starts to select and attend tenants, collect rents, supervise the properties, among others. It is recommended to hire a professional property manager to attend these needs. Normally they charge between 8 to 10% of the collected amount. A full video of the property management features can be found in the YouTube channel. Thank you for watching. Please, do not forget to subscribe to our YouTube channel.